Hey traders, Jason here from Leavitt Brothers. Happy Wednesday, happy Fed Day. I haven't done an update to my State of the Market series in about 10 days because I've been busy working on a masterclass in trading. All the lessons have been complete. I just need to finish uploading it and making sure everything works and looks pretty. Should be done in the next week. You can look for that. All right, let's do an update of my State of the Market series. The S&P recently hit a new high. Market breadth confirms the strength, but there are a couple items I'd like to see improvement from, so I'll talk about both. All right, so here's the S&P 500. Obviously, we have a nice, steady, stair-stepping trend up. You know, it's like two steps, like 3 steps forward, 2 steps back. New high over here. I can draw trend lines, you know, kind of like this. And now the index is just kind of consolidating a new high. It's been nicely supported by its 200, like here, you know, just along here. So everything looks good. The S&P is doing well. I don't have any complaints. I don't know how you could be anything except bullish here. I fully expect higher prices. And if you wanted to, you know, put in like some sort of measured move, you know, starting around 2,800, somewhere in here, going up to 3,000, a little bit higher. First target would be like 3,200, 3,250. And then after that, I actually think we go much higher, especially with the election coming next year and Trump knowing that if the market does well, he's probably going to get reelected. If the market doesn't do well, he might lose. You know, he's going to do everything within his power to make it go up. So trend is up. You know, what else do you want? Your bias should be to the long side. There's nothing else to say. All right, here's the weekly chart. The rate of, you know, it's channeling up here. We had kind of had a channel here, narrow channel, up, up, up. Now we have like a wider channel at a shallower slope. You can see that other than the dip at the end of last year, the market has just kind of rolled up and down. Big buying opportunity here. Not a buying opportunity there because it dropped again, but buying opportunity, buying opportunity. The 50-week moving average has supported it. Now we're at new highs. Again, it's like the trend is up. Don't argue with it, okay? Don't fight with it. I mean, the list of reasons why the market should go down is pretty long, but it's going up. And when you think about how the market has done, you know, basically consolidated for, you know, the last 7-8 months, impeachment talk, recession talk, global slowdown. I don't know, is that really happening? You know, a lot of negative stuff. Sentiment is kind of bearish. And yet the market is held up and is at its highs. I mean, that's a pretty strong indication right there. So trend is up. Bias should be to the long side. It's not until this thing falls, comes up here, gets rejected by its 50-week moving average, and starts heading down, then I'm going to actually change my tune. Okay, so for now, I'm long, and I plan on staying long for a while. All right, let's look at some breadth indicators. All right. So my number one indicator is the 80 line at the NYSE. Obviously, it's trending up, new high recently. I want to point out a couple differences here. So you see last October, market was doing well, trending up, new all-time high. I think that was new all-time high right there. But you can see that the 80 line had already started to roll over and it went below its 50. So on the leg down, we got a pretty big push here, and then on a rally attempt, it got rejected and never got above the 50. If you compare that to this year, we had a pull back here, but all the AD line did is kind of pull back to its 50 and then bounce. We got a pull back here, all the AD line did is pull back and then find support at the moving average. Same thing here. Okay, so there's a big difference between, you know, this is a pullback within an uptrend, this is a pullback within an uptrend, this is a pullback within an uptrend, as characterized by these relatively minor dips from the AD line. Compare that to, this is the beginning of a downtrend because the AD line actually went well below its 50 and then got rejected a couple times and continuing down. So there's a big difference between this and this, okay? So until this, let me see if I can delete this stuff. All right, so until the AD line until it goes, you know, comes down like this and comes up and gets rejected by the moving average, it starts to roll over, and still it does something like, until it does something like that, my bias is going to be to the long side. Okay, overall, it doesn't mean we can't have a pullback that goes, this pullback here went for an entire month. This was pretty stiff. This is only a week, but it still was pretty stiff. So it doesn't mean we can't have a stiff pullback and even an extended pullback that lasts 4 or 6 weeks. But until we get the AD line that goes below and then gets rejected and continues down, until that happens, my long-term bias is going to be to the upside. Okay, here's new highs. Okay, as long as the AD line, not the AD line, the new high lines oscillate within this range, up, down, up, down, up, down, up, down, then the uptrend will be supported. We got a little dip here, but it immediately recovered. We got a little dip here, but immediately recovered. Okay, if you compare that to last year, fully supported here, up, down, up, down, up, down, but then obviously we got a lot of low prints here, which told you that that this was going to be different. Okay, so if you look at this is a pullback with an uptrend, stayed within range, pull back with an uptrend, pull back with an uptrend, but this is obviously different. So if you compare these pullbacks to what's happened in the past, we can define all these pullbacks as pullbacks with an uptrend. It's not the beginning of something worse. So again, like the other ones, until we get new highs come down here and kind of get trapped down here, my overall bias is going to be to the upside. All right, percentage of stocks above the 50 and 200-day moving averages. You guys know the routine here. So in the market, to support the market, you get these just oscillations above 50, 55%. Then we got a divergence here as the market pressed higher, and that caused the market to correct. No big deal. And then we got more prints above 50, 55%. A divergence led to another correction. Okay, like clockwork, no big deal. Okay, minor dips below 50 or 55% are just dips within an uptrend. That's a dip within an uptrend. This is a dip within an uptrend. This is a dip within an uptrend. Okay, if you compare it to last October, where for one, we got new highs here, but this indicator was already down at the bottom of its bullish range, then it fell hard. Okay, notice how low these prints are compared to these higher prints. Okay, so it's very obvious the difference between these. This is a dip within an uptrend. You get like a shallow dip below 50, 55%. This is a deep dip, and so it tells you that it's something more. Okay, and then obviously it got rejected twice and continued down. So we have a little bit of a divergence here, something to keep an eye on. But even if this thing rolls over and kind of does this here, I'm fine. I'm going to treat that like a dip within an uptrend, and it's not until it goes like this that I'm actually going to think it's going to morph into something worse. All right, looking at the bottom pane, obviously you have a similar situation just at a higher level. Okay, a dip within an uptrend sees the percentage of stocks above their 200 just dip to the bottom of the range and then recover, dip to the bottom of the range, recover, dip to the bottom of the range and recover. Backlog last October, you got a dip to a much lower level. Okay, so this is a clear difference between a dip within an uptrend versus a dip which then morphs into a full-blown downtrend. So until this thing, if we get a dip here and then up, I'm just going to keep playing it like it's a dip with an uptrend. But if it drops below down here, then I'll reconsider and think that something worse could be playing out. So for now, I'm long, and my bias is going to stay to the upside. All right, last bullish chart. Here is the AAII bulls minus bears. I consider low prints to be at first kind of a warning, but then they become bullish. Okay, when lots of people here are bearish, that's what these prints are below. That means lots of people are bearish. What does that do? It sets the stage for a nice rally. When people are really bearish here, it sets the stage for a rally. We got bearish prints here, and this one started the rally and this one continued the rally. Okay, so what we've had here since the beginning of August, we've had like mostly a big block of bearish prints. Bears are pretty high. Okay, impeachment talk, recession talk, inverted yield curve, all that jazz. There's a lot of bearishness out there, and in my opinion, this sets the stage for a nice rally. Okay, I know that's like backwards thinking. If things are bearish, they should be bearish. But actually, when you have 3 months of like almost all negative prints, bearish prints, that sets and the market's at its high, that sets a really good foundation for explosive breakout here and market going much higher. All right, so a couple warnings. Here is the SP 500. Here is the in the middle is you got the high beta stocks, and in the down below is the low beta stocks. High beta stocks are the 100 highest beta stocks in the SP 500. Low volatility is the 100 lowest volatility stocks. All right, so when the market moves up, you want confirmation mostly from the high beta stocks. Okay, so over here we have new highs, which were confirmed by new highs here, but not here. Okay, these highs were lower than those. Okay, so the market headed south. Like, you didn't get confirmation from the high beta stocks. Same thing happened here. We got new high here, but again we got a lower high, so no confirmation there. We got another new high here. Okay, we got a higher high, but this is still below. Okay, so we didn't get confirmation there, although we did get it from the low beta names. Okay, so what I want here is, with the stock market, with the S&P at a new high here, I need high beta stocks to improve. I need them to do better. I need them to get up there. Okay, because each time the market goes to a new high, but the high beta stocks don't confirm the move, the market tends to top thereabouts. Okay, soon after. Okay, so that's what I want. I need improvement from the high beta stocks in order to confirm the move. If we don't get it, market's not going to go very far. All right, last chart. All right, so this is, up top is the small caps versus big caps. Down below is the S&P 500. So what I want to get at here is at the beginning of a move. Okay, so here you have small caps leading large caps. And this happened for a long enough period of time that the S&P 500 could achieve what I consider to be escape velocity. Okay, so they led for a couple months, momentum built here, and then even after the small caps started to lag right there, and there was enough momentum that could carry the market higher, as it did there. Okay, same thing happened here. Small caps led large caps for 2 months. This enabled the market to rally. Okay, and it rallied enough and gathered enough momentum that it can carry on for another 2 months. Okay, but if you look here, market rallied. Small caps did not really lead for any length of time. Here, small caps led for like a week or 10 days. This helped the market, but it wasn't a long enough lead to really gather momentum and push things higher. Okay, now they're starting to lead a little bit, but again, we need this to continue. If I draw this in another 3 weeks, I need it to be like this. Okay, the small caps need to lead by enough and for a long enough period of time for the market to achieve somewhat like quote unquote escape velocity, and then they could back off and the momentum will just kind of carry the market forward after that. So that's what we need right now. Okay, overall, I'd say market's in good shape. I'm fully on board with the market, not just heading higher, but going much higher. I kind of hope the market reacts negatively to the Fed decision today so we can buy at lower prices. But again, overall, market's doing well. Indexes are doing fairly well. Breadth indicators are doing well. I just want high beta stocks to improve, and I'd like to see the small caps outperform for at least a couple weeks to enable the market to gather some momentum that will sustain itself for a little while. All right, thanks for listening. I'll see you next time.